March 1st, 2024. I think something that's really important with these days is to notice that there are no closes below the moving average. And there are two open gaps. So you have an open gap with the one high and the nine low. You could argue that seven, it traded up and then it came back down. So bears sold there, scaled in, and made money. But seven moved so fast, it would have been really hard to do that. And I think traders would still be selling the day's extreme. And then we had another open body gap with essentially the 12 close and that 25. And it's easier to see these on a line chart, but open gaps are incredibly important. So let's look at a line chart. You can see here, open gap with this high and that low, and open gap with this high and that low. And what those open gaps provide, what it really is trap traders. The market is trapping traders all day. So the traders who, sold above this high and tried to scale in higher were not able to get back to their initial entry price. So at a certain point, they end up taking a loss, which drives the market higher. And the thing about days like these is the market's always looking like it's going to reverse, which is always trapping bulls out and trapping bears into selling. And that's why it's able to trend up all day in this small pullback fashion. And what's happening on bars 54 and 55, right? Why does the market suddenly get stronger? Well, the reason the market suddenly gets stronger is because it's when the final bears end up giving up. It's when the bears say, okay, fine, we've lost, basically. We've lost, and this is a bull trend day, and we're going to give up. And you end up getting a bounce a lot of times in these small pullback trend days towards the end of the day. And another prime example of that would be we had one of these days here, and this was actually the bounce occurred on like the same bars, essentially at 2 o'clock, 2:10, 2 o'clock to like 2:25, because around 2:30 the market often tries to reverse. You can see we had the same thing around 2 o'clock, and then it tried to reverse at 2:30. So the market often tries to reverse around 2:30 Eastern Standard Time. But overall point being, these bars that generally happen around 2 o'clock are the final bears giving up, and you have trap bears from these open gaps. And again, open gaps are so important. There are a lot of examples of just two early open gaps, trend day, two early open gaps, not a trend day, but you can see this was consecutive sell climaxes, two early open gaps, one with the prior day's high, and then this one, somewhat of a trend. You can see just a lot of these days end up being trend days or getting early trends. This is a good example. So just that's something to keep in mind, I think, is when you get those early open gaps and there's constantly closes above the moving average, you should be buying and just be extremely stubborn. So, take a buy like 20, like 26 or 28 or 33, 34, whatever. Take it and just say to yourself, I am going to hold until there is a close below the moving average. And you can do that. And, it was more, or, once you start to see this rally, the move's probably starting to come to an end and you can take profits up here. But, or, you can just hold. And, that's one of the things that it's hard to do on these days, but you start to get used to it is you just buy and you say, I am going to hold until there's a clear close below the moving average, because reality is these are all minor reversals and the bears haven't really been making any money all day. So it doesn't make a lot of sense to be selling here, selling here, selling here, getting out there, much less selling. But anyways, bull bar on bar one. It's a good looking bull bar, and it's follow through from the gap up, but we might get a lower high. This bar was so big that I think we might get a lower high from it. Bad follow through on 2 for the bulls, probably buyers below 1. 3, a doji bar, weak double bottom with 1, lower double bottom, not all that good, probably sellers above, which we got on 4. Inside bar on 5, but it's not a good sell. If you're selling 5, you're selling the bottom of a tight trading range, 3 and 4. And a lot of times here, you're going to end up getting trapped. And one of the reasons you get an outside bar like 6 is because when, any trader who does sell 5, they know they're selling the bottom of a tight trading range on the moving average, right? So they know this is a low probability trade. And it's low probability and it can go against you really quickly. If you took the trade, it goes against you really quickly. And so those traders anyone who's selling 5 is giving this trade like 10 seconds, basically. You have 10 seconds to impress me and start to collapse. Because if you're selling 5, you're looking for basically a collapse. And if it doesn't start to happen, those traders quickly just get out of the trade. And that's what causes the bar to be so big on 6 and get bigger than you want. 6 is a high 2 on the open. You get high 2s and low 2s on the open. I only have a couple examples, some from like past days, but we got a low 2 on the open, high 2 on the open here, high 2, and then I think today. Yeah. So, anyways, high 2 on the open, low probability, low of the day. If you were watching 6, we would have seen that bar 7 ended up being really, it was big and it ended up going 12 points. Why 12 points? Well, bar seven, within it was pretty much impossible to buy above six because bar seven moved so fast. Within like 6 or 7 seconds of the bar opening, it was already up here. Like within 1 second, it was up here. It was pretty much impossible to get filled properly buying above six. And so I think what probably happened is traders wanted to scalp with 10 points because they got there, it got up here within a minute or two. And so what I think probably happened was bulls wanted to make 10 points buying above six, but they got slippage on their trade, maybe a point, maybe a point and a half. And so they ended up, it ended up going for 12 points because those bulls, they didn't get filled where they wanted to. They got filled a little higher. So they had to, wait a little bit longer to get those 10 points. And then when they got it, they sold. And that's what caused seven to be so big. Eight, an inside bar, a big bull bar. It's clearly always in long at this point on eight. I think it's okay to be long above eight. It was a big enough bar that I think, again, clearly always in long. And you can get out below pretty much any bear bar. Follow through for the bulls on nine, but a tail on the top. So if you bought above eight, nine isn't super ideal. Doji bar on 10, potential pullback coming here. We might get a bear bar. And then you get a bull bar on 11. It's a high one, but a tail on the top. So, you can be long here, but it might not be great. 12, a bull bar closing near its high. I think 12 is a little tricky. I think it's, the logic for buying it would be it was a reasonable buy above eight. And if you bought above eight, you'd probably still be long. And so 12 makes sense to buy above because it's bull bar closing near its high. But the problem is you might have a wedge from, I think, bar 78, 7, and 12. So you could have some sort of wedge forming here. And additionally, there were so many sellers at this price on bar 7 that we might need a really strong follow through bar like we end up getting, or on like 13. So you're getting a breakout above this price, but we want a strong follow through bar on 13. The all-time high also was right here, 5123.25. And I thought that when we went straight through it here, we were going to have to, well, I'll get to that. So outside down bar on 13, disappointing for the bulls. 14, an inside bear bar, but don't sell it. Look, I mean, what have the Bears done today? Have the Bears made any money? No, they got trapped here. No one's selling that, but if you did, it didn't do well. They get trapped here, get trapped here. If you sold that, it's a bad sell, but you got trapped. So what do you think's gonna happen on 14? Are you trying, don't try and be the first bear to make money when pretty much bulls could have bought with impunity. You could have bought the high ticket 7, and you would have ended up making money on 12 if you scaled in. So, I don't really think it's very good for bears to be selling here. Additionally, these limit order bears are still trapped. So if you're selling 14, you know that like a couple points below, there's going to be sellers or there's going to be buyers at this high. And 14 is a low one in, so far a bull trend. So really not that good. Outside up 15, back to clearly always in long. Bulls can buy above 15 or wait for another bull bar follow through. Disappointment on 16 looks like it might be a failed breakout, but we're probably getting to the all-time high, I think. Follow through on 17 for the bulls, a good bull bar. The risk is getting big. What are the odds that we're going to get all the way up here before we get a pullback down to here? It's probably still at least 60% that we're getting up there. But so reasonably long, reasonably buying 15, 16, 17. Doji bar on 18, and we tested the all-time high, found some sellers. Good bull bar on 19, but the risk is getting really big now. Something I like to do when I suspect it might be a trend day is just pick the most ridiculous measured move possible. At this time it was this, and then I saw this, and I was like, okay, well, what about up here? And that's basically where we ended up going. But a lot of times, on these small pullback trend days, just pick a measured move that you think like there's no way it's going to get there, basically, based off the day's range. And a lot of times it'll just end up getting there towards the end of the day, which happens a lot on these days. A good example of that back on this day was, we got a breakout above the wedge. I mentioned, 1, 2, 3. And, you're sitting there looking at, or I guess it was with bodies, wasn't it? And you're sitting there looking at this bar and you think, you're like, well, we're not going up there today. Like, what are the odds of that? But all closes above the moving average. Bears making a little bit of money, but not all that much. And as long as we keep getting those closes above the moving average, we might just end up going there. So on these kind of days, I like to just pick the most ridiculous measured move and see if the market gets there and just hold long. So we broke through the all-time high 19. I think we're going to have to retest it because it's an important magnet. So doji bar 20, potentially a parabolic wedge, 1, pullback 2, pullback 3. So some sort of reversal down, 21. 22, a bull bar closing near its high, but since 21 was, or since we got a parabolic wedge, I'm expecting 2 legs sideways to down, not just one. So I don't think 22 is a very good high one buy, unless you have a really wide stop like below 15 and are willing to scale in. But generally, when you get wedges, parabolic wedges too, you expect a couple legs sideways to down. Follow through for the Bears on 24, or sorry, disappointment for the Bulls on 23. And what do? They exit the market causing 24. Some follow through 25, but don't sell. Again, get a strong close below the moving average before you look to sell. Then 26, you can see Bulls were eager to buy the moving average, and we got a big reversal bar up. Problem with 26, it's a really big bar, so really big risk, but an okay swing trade. Follow through for the Bulls 27, 28, but there were sellers up here last time, and we might have to pull back again before we continue up. Disappointment 29. It's still okay to buy the close of 28, but it's just, you can't buy it and then get out somewhere down here. If you're going to buy the close of 28, you have to realize you're going to sit through a pullback. So as long as you don't get the close below the moving average, your premise of a bull trend day is still valid. So as long as that premise is valid, it's okay to continue to hold. 27, 28 fall through for the Bulls. Doji 29. When you get a doji and buy the close bull trend, it might start coming to an end soon. So disappointment 30, 31. With days like this, when you're buying highs like this or up here, whatever, you're going to have to sit through pullbacks. These days are easy to make money if you're willing to hold, but you're going to have to sit through a lot of pullbacks. It's just kind of the reality of the situation. So that's why you have to be stubborn on these days. Follow through for the Bulls so 3-bar pullback for the Bears, but those happen sometimes. You get, I suppose I'll add it to my strong 3-bar pullback trap in trend. There you go. So we got a 3-bar pullback trap within the bull trend, which happens sometimes, and a bull bar closing near its high on 33. You can buy it above for 33, follow through 34, 35, the doji 36, but I'm not selling that. I wouldn't exit below. This is going to get a second leg. 37, a bull bar. If you do exit below, you get long again. Disappointment 38, don't exit. These are just doji bars. Doji 39, bull bar closing near its high 40. It's a tight trading range, but this is a small pullback bull trend day pretty clearly at this point. So just buy and hold. Basically just hold your breath. And, if you get a close below the moving average, you can reevaluate your premise. But on days like this, usually when it's this far into the day and bulls are clearly buying, you probably just want to hold. 40, fall through 40, 41. And this is what I'm talking about. If you're buying above 41, it's not just going to continue to rocket up. Like, it's very unlikely. Look how the day's been moving up so far. So you have to be expecting to sit through a pullback. So it's really not great to buy above 41 and exit below 42, because that these reversals are all going to be minor until you get the close below the moving average. And even if you get the close below the moving average, until you have a wide stop and it starts to go down, you're going to be able to scale in. For example, the bulls who bought the high close here, 60, they were able to scale in, and they even made money. So even if you get trapped at what feels like you're getting trapped at a high, on days like this, it's not really anything to worry about. 43, a bull bar closing. It's a doji, but it's a bull bar. So if you exit below 42, you were scared of a collapse and you didn't get it. Buy again above 43. Disappointment 44. Double top 45, but bears get trapped 36, trapped 38, trapped 42. What do you think's going to happen on 45? Probably going to get trapped, and they do. 46, a bear bar, but not really all that great. Probably more buyers below. 47, an inside bar, doesn't even let 46 trigger. Some bulls might exit below 46, but that's why they buy the close and don't let it trigger. Follow through for the bulls 48, 49, disappointment bar 50. And then surprise 51, potentially failed breakout of a channel 52. So, but it's bears keep getting trapped. You don't want to sell 52. And if you do exit below 52, you buy again above 53, and you get big follow through, bears covering 54, 55. And once you start to get this kind of stuff, that's where you should start looking to take profits. Disappointment 56 and then 57. You can see any of the bulls who are buying up here hoping to get a bigger rally found this disappointing and exited around break even. 58, a second reversal down. Some bulls will exit and need a reversal up. 59 and follow through on 60, but now you're on this channel line, so it might not be all that great. And outside down 61. It's reasonable if you bought this to be looking to scale in lower with a wide stop, maybe down here, and buy more as it goes below here. Maybe buy more down here if it went down here, but didn't, and then scale in, get out with your initial price or around break even on your initial entry. And so that's what ends up happening here. Bulls are scaling in, and bears know that any sort of selling up here is just going to result in a scalp because of how strong this is. So you get this rally, and those traders end up exiting. But yeah, just on these days, you just got to stare at them 1,000 times. I remember, first off, I made money today. on this one, but there's been a million times before, and relatively recently even, where I would look at these days and I would just end up letting it go and not making very much money. And I always remember I used to always say to myself, I'd see a small pullback bull day or a small pullback bear day, and I'd let it go basically, and then I'd be like, the next time that happens, I'm definitely going to make money. And I've said that to myself before, like 100 times, and every single time, the next time I don't end up making money. So don't be frustrated with yourself if you're doing that same thing, because these days they're really difficult. But if you have two open gaps and you're holding above the moving average, just keep buying and holding. On the daily chart, it's pretty climactic. I'm not surprised we broke to a new all-time high. I think the bears who sold this high and are willing to scale in are going to make money. It's interesting that we didn't quite, if you look, we didn't quite touch this breakout point. There's a very small gap, but it's still a gap. So interesting that we didn't quite get there. We'll see what happens up here, but I'm expecting disappointment for the bulls on Monday. The weekly chart, another bull bar. We could get some sort of climactic blow off the top bar next week or something. I'm not sure, but again, we're very overdone. We're getting far away from the moving average. The risk is really big for the bulls. So relatively reasonable to start expecting disappointment. And yeah, that's the day.